welcome to USISPF Conversations. I'm Akshobh Giridharadas, and I am delighted to be joined by Nilesh, Shah, Managing Director of Kotak Mutual Funds, speaking to us from India. Nilesh, at the outset, thank you so much for talking to us. There's never a dull day in India. There's never a dull day with the Indian economy as well. And a very profound aspect of the economy, Nilesh, has been forex reserves, because while India has going to be celebrating its 76th year of independence soon, people forget that India's economic independence is little over 30 years, 1991, with the reforms and the FX crisis, and where India had to pawn off gold reserves to stay afloat. But today it's an FX shortage to an FX surplus, and very unlike other South Asian neighbors. And as per your latest report, India is fourth in largest FX reserves behind China, Japan, and Switzerland. That's a very impressive list. Perhaps talk us through the FX surplus that India has right now, and also we keep seeing news about the rupee against the dollar. So where do you see the outlook of the rupee right now?
So India suffered in 1990s humiliation where we had to pledge gold to borrow money, and we had less than $1 billion FX reserves. Post that, steadily India focused on three things. One, remittance. Today, Indians all over the world remit almost $100 billion to India. This is the largest remittance in the world. Second, in IT services, India has excelled very well, and it has become back office to the world. Third, now we are also doing well in services exports. Between IT services and remittance, India earns around $250 billion of services. Our share in global services is almost 6.5%. And this is helping us to maintain healthy reserve. In fact, we are one of the few countries in the world where the net foreign exchange reserves at more than $600 billion is more than net foreign exchange debt. This also again gives confidence to global investors that India will have money to pay its obligations. Now, this is reflected in rupee. It has been one of the most steady currency, less volatile currency over last 1.5 years. Earlier, the inflation gap between India and its trading partner was between 5 to 7%, and hence rupee over a long period of time used to depreciate by that. Today, the gap has narrowed down to around 2 to 3%. So rupee will still depreciate, but not like before 5 to 7%, more like somewhere around 2 to 3%.
Yeah, I wanted to stay on the rupee for a second, because normally emerging market economies, whenever there's a geopolitical crisis, get hit. The rupees, the ringgits, the rupayas, all the emerging market are currencies. Given the energy crisis we've seen with the Russia-Ukraine war, and normally we've seen this in 2013 when the current account deficit ballooned. India, of course, is an energy importer and a very vast billion-plus population. So that's where the rupee volatility came in. Do you find that the rupee has somewhat solidified now with cheaper Russian oil imports? Where do you see the outlook of the rupee in regards to the energy crisis that we're seeing globally and the food shortage crisis that we're seeing globally?
So undoubtedly, India is the large importer of oil, top 3 importer of oil in the world. And higher energy prices will have negative impact on Indian economy. In 2008, when oil touched $100 a barrel, our GDP was 1/3 of Brazil and Russian GDP put together. And hence higher oil prices had a much worse impact. In 2022, when oil touched 100, we were equivalent to Brazil and Russian GDP put together. From being 1/3 to becoming equal gave us more ability to bear the pain. Now, if energy prices go higher, undoubtedly it will have some impact on India. But our ability to bear that pain, because our energy intensity of economy has come down, is a positive thing. And will higher oil prices sustain? India, along with other nations, is focusing upon renewable energy. while to the left and right of us, God has given enough oil to the neighbors. We have plenty of sunshine. We have deserts on the western side of Gujarat and Rajasthan. A tiny percentage of that covered with solar cells can empower entire India. So we believe globally oil producers also will keep in mind that if they raise oil prices beyond certain limits, it will accelerate adoption of renewable energy. And if that acceleration happens, the terminal value of oil in their hand will be not worthwhile. So we believe oil will go up and down, but in a limited range, and Indian economy is ability to bear that pain.
Yeah, absolutely. I think that's where the US and India are working on, the strategic clean energy partnership and looking at renewable and energy financing. Speaking of banking, one of the highlights and what the world sort of owes at when you look at India is this digital revolution, UPI. We recently saw Prime Minister Modi in France talking about, Indian tourists in Eiffel Tower being able to use UPI transactions, and India and Singapore having a cross-platform. Just some statistics that you pointed out is India has 41% global market share in the digital space, 48 billion transaction, and even ahead of China, which of course is got I guess, as now on par with Indian population. And in 2014, there were 800 million digital transactions. This was even before demonetization perhaps pushed the digital. Just talk us about the Indian digital banking landscape, because I think when Westerners perhaps look at India, this is still fascinating given how India was primarily seen as a cash-based economy. And that's what in 2016, the view was it's a cash-based economy. So just, under a decade, it's been quite a revolution, hasn't it?
So I think all credit goes to various governments which work together to unleash digital revolution in India. We have biometric identification through Aadhaar that identifies almost 1.4 billion Indians. We have open bank accounts for almost every Indian, and we open 10 times more population than Australia equivalent bank accounts in less than between 2014 to 2017. We also jumped from landline telephones to mobile telephone. There was a time when to get a landline telephone we had to wait for 10 years, and today mobile phones are available instantly with smartphone. Combination of Jan Dhan bank account, mobile and Aadhaar allowed government to provide digital services. India has transferred almost $280 billion over last 9 years into individual recipients' account for various subsidies and benefits. There were massive leakages earlier. Now the leakages have been stopped to a significant extent. When COVID came, entire India was moved onto a digital platform where they could take appointment for receiving vaccine, and they were receiving vaccination certificates on digital basis. This was true democracy. The richest Indian and the poorest Indian used the same platform to get vaccination and get vaccination certificate. Now India is moving ahead on payment side. There was a noted journalist who moved from India to France, and the first tweet he made is that when I wanted to shift money in India from one bank account to another, it was instant. The damn thing takes 3 days in France. We have leapfrogged in the payment mechanism through what is known as UPI or BHIM. It's instant credit with virtually no cost. Finally, this has now moved to what is known as ONDC. Today, globally, there are platforms like Amazon, which brings buyer and seller together. But for that, buyer and seller has to be member of Amazon. India has created a platform called ONDC, where any buyer or any seller will be able to come together and avail services of, let's say, delivery partners. Now this straightway expands market without any forced intermediation. I can go on and on about the digital revolution in India, but one has to come to India to see how digital revolution has brought true democracy in India.
Yeah, absolutely. And I think that the digital revolution has also sparked, as you rightly said, as healthcare benefits, medtech, edtech, the startups, and given India's strength in IT as well. Of course, one aspect of banking that's always come up in the past, and your report touched on it, is NPAs, non-performing assets. That's perhaps plagued some of the more public sector banks. What is the outlook right now for NPAs? Because that's always been a concern for the finance ministry, the RBI. What's the current outlook right now?
So one of the limitation for India was a very, very weak judicial infrastructure, especially for commercial contracts. And defaulters took advantage of overburdened judiciary to delay their payment. Government came out with insolvency code, fast-tracking recovery. More importantly, banks also tightened their credit standards. Put together, this has created a Cinderella time for Indian banking system, where NPS are at decadal low level. More importantly, all of them are provided for because banks are making reasonable amount of money. In fact, in lighter vein, there is a very, very small bank in Mumbai called Shamrao Vittal Bank. When SVB crisis erupted, they had to actually tell their customers that, look, what you hear about SVB is the American bank and not us. We are in a safe condition. Today, Indian banking system has one of the lowest NPS. It has one of the highest efficiency, and it is growing at a reasonable pace to support Indian economy.
I think that itself is a very sanguine now yardstick going forward in terms of where the Indian banking system now is. And you touched on something which segues beautifully to my next question: infrastructure. One of the things in the past has always been, when investors come to India, there's a lot of potential that they see, a lot of sector that they see, but there's been a question about infrastructure laggard. I think now with you have plans like the Gati Shakti and the National Logistics Pipeline, these sink in well because ahead of the G20, we're seeing a lot of focus on new infrastructure projects, the Mumbai Metro coming in, and metros in other cities as well. And the Prime Minister spoken about greenfield smart cities. So where, as you know, as looking at the Indian outlook right now, infrastructure is always a very hot topic. There's a lot of potential for projects, but there's also been a laggard in terms of approvals and going at the space we have to, because India is a large country, but also there's not a lot of space given the voluminous population, unlike the United States perhaps, which is far wider space. So I'm just curious on where you see the infrastructure landscape right now.
So clearly, infrastructure was the constraint for India's growth. And what infrastructure we built between 1947 to 2013, almost similar infrastructure is built between 2014 to 2024. Mathematically, 67 equal to 10 is not the right equation, but we Indians are living that. Before 2013, total highways, central and state, in India were about 82,000 kilometers. By 2024, it will be 165,000 kilometers. Indian ports were handling 1400 million metric tons of cargo. By 2024, it will be 2800 million metric tons. Indian railways had 22,000 kilometers of tracks under electrification. As we speak, we have about 59,000 kilometers of railway track under electrification. Now we have lesser number of diesel trains in India than America. Prior to 2014, we had 5 cities where metro was running at about 250 kilometers length. Now there are 27 cities in which metro is under construction, and we should be crossing about 2,500 kilometers of metro network, which will be bigger than America in few years down the line. road, port, power. We had 70 airports prior to 14. Today we are at 140 plus. In everywhere, government increased allocation and also focused on execution. Earlier, road contracts were awarded in a lethargic manner. Now there is an online portal on which contractors bid, and half an hour decision comes out and orders issued. By digitizing the ordering process, by increasing allocation, and by focusing on execution, India is creating or living the equation of 67 equal to 10. Now, have we sorted out all of India's infrastructure problem? Answer is no. Urban infrastructure is still lacking. There is an improvement, but we have some distance to cover. Some of the cleanliness we lack way below Western standards. We have to cover up there. So it's a work in progress, but roads, ports, power, airport, metro, railway electrification, we are now reaching infrastructure availability category. Urban infrastructure and sewage treatment, garbage handling, this is where we are behind and we need to catch up.
Yeah, of course, and one can never solve all the infrastructure problem. That's a utopia, and utopia only exists in Barbie land, as the reason for you tell us. But there are a couple of themes that are very important that's coming up right now. What the Prime Minister has said since taking office in 2014, make in India, because India's economy went from, I think, agrarian to services, but skipping manufacturing, which of course made China the manufacturing capital of the world. And as China goes into a more consumption-led model like the United States, that space has been picked up more by countries like Vietnam, Thailand, Mexico, Indonesia, maybe in Bangladesh. But of course, India is pushing ahead with Make in India, production-linked incentive schemes, and right now semiconductors are, the new oil, because that's where the focus is on critical and emerging technology. This ties into very important aspects. Where do you see India's manufacturing economy, particularly because companies are looking at a China plus one strategy right now, and COVID showed that supply chain disruptor in China cannot be supply chain disruptor on the world. So India is a viable alternative with a large population, large base. How do you see this Make in India also tying into companies looking at India as a China plus one model?
So in 1980, India and China were having similar GDP and similar per capita GDP. Today, China is about 5 times bigger than us. They became manufacturer to the world. We became back office to the world. We jumped from agriculture to services, missing manufacturing. They moved from agriculture to manufacturing to services. Why did India lose out on manufacturing? One was infrastructure constraints. To a reasonable extent today, those constraints has been removed. Is our infrastructure at par with China? Answer is no. But the gap has been narrowed down significantly. The second was related to ease of doing business. Clearly, we had license permit Raj prior to 1990. We started liberalizing our regime. We started welcoming foreign direct investment. And today, India is one of the rare countries in the world where the largest automobile company, largest private sector bank, largest private sector insurance company, largest listed FMCG company, largest listed telecom company are all majority owned by foreigners. Whether they are foreign direct investor or foreign portfolio investor, but combined, they are the owner of such strategic interest in the company, in the country. So I believe going forward, India's manufacturing story will start looking better and better. One, infrastructure has been created. Second, ease of doing business has been implemented. We haven't reached our destination, but it's an ongoing journey. And every year we are becoming better than previous year. Third, Indians have now started capturing China plus one opportunity. In mobile phones, we were importer, now we are exporter. All the 3 suppliers of Apple's iPhone now have base in India. In fact, the world's largest mobile handset manufacturing unit is run by Samsung in Noida, Uttar Pradesh in northern India. We believe India is now focusing on manufacturing, and it's a win-win situation for global companies. Many of the global companies which went to China did benefit from a superior growth, but their IPRs were always at a risk. In India, we have shown them that your IPRs are safe. Of course, you have to live with ups and downs of Indian economy and Indian markets. The best example which I give to global investors about India is the story of Maruti Suzuki. Suzuki Motors came to India in 1980 to set up an automobile plant. And through ups and downs, they have stayed in India. They got listed on Indian markets in 2003. Over the last 20 years, they have delivered better return in stock market in US dollar terms than what all the Japanese automobile companies have delivered. Toyota, Honda, Nissan, Suzuki, all four put together have underperformed Maruti Suzuki. Maruti today in India sells more automobiles than what Suzuki sells worldwide. Maruti has become the crown jewel of Suzuki empire. What Maruti did with Suzuki, I believe it is possible with every Indian company to their parent. Hindustan Unilever is crown jewel for Unilever PLC. It accounts for almost half of their market capitalization. The same story will get repeated with every multinational company who is setting up a base in India.
Yeah, those were the famed days where Japanese companies came in. Remember Kawasaki, Bajaj, and Hero Honda. The Indian economy and looks a lot different now. But I have to ask one of the things that perhaps comes up in conversations with a lot of American investors, overseas investors. There is perhaps a larger notion of investing in India. But of course, a reminder that India is a federal system, just like the United States. There's a difference of doing business in Texas and business in New York or in California. And it depends on what states. And we've seen there's a state competitiveness, which is good, healthy competition. But traditionally, we've seen Western and Southern states do very well as compared to Northern and Eastern counterparts. As we in this federal system, how do you see state competitiveness coming up, especially as we look at India's economy right now, still bucking trend of global headwinds? G20 will try and focus on investing in states right now, and of course, a very important election year coming ahead. States want to show economic competitiveness. So, where's the outlook right now for states?
So, my recommendation will be that you think of India as a continent. Our smallest state, Goa, has population equivalent to Estonia, and the largest state, Uttar Pradesh, is bigger than Brazil. The richest state has per capita GDP equivalent to Indonesia, the Delhi, and the poorest state is poorer than Sub-Saharan Africa. So when you look at India, you are looking at population from Estonia to Brazil, and you are looking at per capita GDP from maybe Ethiopia all the way to Indonesia. There are three India living together. Maybe 1% of Indians have per capita GDP equivalent to France, that's developed nation. About 30% of Indians have per capita GDP equivalent to a middle income country. And about 70% Indians are still living at Sub-Saharan Africa standard. Now, this variation is caused because of the difference in various states. Some states had entrepreneurial community like Gujarat, Maharashtra, Tamil Nadu. They have done well. Some states had natural resources, but they couldn't exploit that appropriately. So there is a wide variation between various Indian states. But very interesting thing, the state where I belong to, Maharashtra, today has same GDP which whole of India had in 2005. In 17 years, Maharashtra reached where yesterday India was. In 2001, Uttar Pradesh and Uttarakhand were combined. Today, their GDP combined is equivalent to 2001 India's GDP. And three other states, Tamil Nadu, Karnataka and Gujarat, has GDP equivalent to 2000 of India. So in about 2 decades, the 6 states reached where yesterday India was. Over next 20 years, can this 6 states reach where today's India is? I think if we continue to work hard, this is quite plausible.
Absolutely, and to achieve that vision of a 5 trillion or a 10 trillion economy, wherever the sky is the limit, it's about state competitiveness, not just traditionally, as we know, in the metro towns or the presidency towns, and that's also been the China model beyond the Beijing and Shanghai's, the Dalians and the Harbins and the Nanjings. And on a final note, thank you so much for your time. You've been very generous. But on a final note, how do you read about the downgrade on U.S. debt and bonds from, I think, to AA rating as it stands? Do you think it'll have any current impact on the Indian bond yields and implications for the global economy? Because the U.S. Treasury bonds are sort of the lifeline of the global economy, that what investors always pick in a recession economy or a boom economy. So where do you see this outlook right now?
So we had seen paradox in 2011 when Standard & Poor's downgraded America. American yield actually came down by 100 basis points. Now there may be many factors, but it will be fair to say that rating downgrade had no impact on American bond yields. Or if at all, it was a positive impact with rates coming down. 2023 is unlikely to be different. For investors, US is AAA. Yes, they have debt problem, but it's an innovative economy. Hopefully, it will find a way to manage its debt burden. If US rating downgrade is unlikely to have material impact in US bond market, they are also unlikely to have any material impact in Indian bond market. We have Reserve Bank of India doing a fantastic job. They have been proactive in reducing liquidity, and they have been proactive in raising interest rates, and which is why we are one of the rare economy in the world where interest rates are still positive.
Well, on that note, apropos bonds, thank you for bonding with us and really giving us the best of your time and giving the outlook of the economy. It's a very complicated subject, and in 13 minutes, you've given the overview of the last 30 years and the next 30 years. So, Nilesh, thank you so much for your time, and I look forward to it.
Thank you.